Let's throw these pointed questions, and with the great pleasure, let me now welcome Navneet Munot, CIO with SBI Mutual Funds. Welcome to the show, welcome to the format. The SBI Mutual Fund this time is the AMC of the month, and for the CIO of any AMC, these are great times. There's a problem of plenty. You have less ideas and more money.
So great time, of course, not only because not only because the money is coming, but the great time for us is when investors make money, and then that's the most heartening feature, that it's really heartening to see this time in this bull market that domestic investors have really participated. So thanks to all our channel partners, thanks to advisors, thanks to investor, and I think over the last couple of years,
say thank you media also.
Of course. So the regulators, media, advisors, distributors, industry at large, and everybody has played a huge role in last few years to create this cult about investing systematically and participating in the India growth story. So no doubt about it.
So let's talk numbers then, and tell us what is it that you've done in terms of growth in the last couple of years, and let's take the last 3 years considering that was the start of the bull run.
So of course SBI funds, we have been one of the fastest growing AMC in last couple of years, but even industry at large, if I remember at the beginning of 2015, the total assets under management were around 10 lakh crores or so, and maybe very soon we are touching 20, and what a increase in the assets under management. And I think industry, the penetration is increasing. There's more and more money coming in from what we call the B51 cities, from the smaller towns, more and more money coming in through the SIPs, more and more money coming in from the very small centers, small investors, and I think that's a very interesting feature. But having said that, it's still the beginning. So 10 to 20 lakh crore looks like a very big number, but you compare that with the size of GDP, size of household savings, size of the bank deposits, we are still very small and long way to go.
You know, all of us know that Buffett is a great investor, so let me quote a Buffett quote here, which is that never ask a barber if you need a haircut, he will always say yes. Never ask a fund manager on the market outlook and the economic outlook, he will always be bullish.
No, but because we have been interacting for a long time, whenever we had any concern on market, any concern on economy, if we saw any risk on the horizon, we would have always highlighted that,
But as of now, do you think markets are getting slightly complacent because suddenly nobody is talking about the risk? We don't know what's happening to the world. US economic growth still uneven. The so-called entire assumption market had with that, the Republican administration would deliver on tax reforms and US markets went up. That's not happened. Earnings were supposed to recover 3 quarters ago or 4 quarters ago. They have not recovered.
So if you're talking about global markets, maybe the volatility across financial markets is at historically lowest level across markets. And so is it a new normal that, we are in a period of slow but steady growth with ample liquidity, or is it complacency on the parts of investor? Only time will tell. But as far as India is concerned, I think the way I look at it is, I think looking at the overall macro backdrop in which we are, looking at the policy environment, corporate profitability is bottoming out. I think the valuations, one can argue, slightly higher than long-term average, but we can discuss more about it a little later, how I look at valuations, and the liquidity flow. So combination of these things, I believe that we are not, Indian markets are definitely not euphoric, or I don't think the investors are getting complacent. It's a structural growth story with cyclical recovery around the corner.
Okay, so last 3 years have been great under the Modi regime. What next? Going forward in the markets, where is it that you see values? Or do you still think that, everything is sort of looking toppish right now?
So last 3 years we are putting a very solid foundation in place for a sustained growth, what I call nice era, and non-inflationary continued expansion. What we have done in terms of the monetary policy committee with inflation target, with the fiscal prudence, with every other measure to boost the tax to GDP ratio and government's focus on infrastructure spending, or the other things that maybe we can discuss separately what the government has done, will create a structural growth environment with a lower inflation, which is great for equity investors or probably investors in any asset class. Where do you see value in the market? I think if you look at the overall economy, exports have started doing well, consumption is doing well. We had some hit from the demonetization, but it didn't last for long, very briefly. The investment cycle, of course, private capex will take time, but the government capex is happening, and looking at all these factors, maybe another 1.5 years when the private capex start, then we'll be firing on all cylinders. Till such time, I still believe that within these themes, there are a lot of opportunities in the market.
You know, you always like this consumption space. For the longest time we've been interacting, you've said that, look, bet on consumption, that's the secular part. Consumption stocks are expensive, not even staples, but the non-staple consumer companies are expensive, whether it is a PVR, whether it is a Jubilant Foodworks or a Page Industries. How are you now approaching this theme?
I mean, I'll repeat the same answer also, that it's like $1,500 per capita will be $3,000 per capita in some time, 1.3 billion people. And I keep telling people, the Uttar Pradesh is like almost as big as Brazil. Yeah. It's like the 5th largest country in the world, and the per capita GDP is half of the national average. Power consumption is half of the national average. Half of the people may not buy some of the goods that you talked about because there is no power there. Once you supply power, once you improve the governance, once you invest a little more in infrastructure, India is like such a big growth story as far as consumption is concerned. Of course, we have to pay attention to the valuations, but even in staple space, we don't own much because the valuations are high, but at some point in time, I think growth may come back.
Given the earnings season, how it's been, and it's been sort of a mixed bag really, 50-50 of good and 50-50 of the underperformers, or rather below what the street was expecting as in terms of the polls. Would you say that the markets have somewhere run ahead of the fundamentals, or do you think what we're currently sitting at is well justified?
So as far as the numbers are concerned, I think what they reveal is probably not the full story, because large part of the growth that we have seen is driven by few sectors like materials, metals, of course within that, and some names in the consumer discretionary. Barring that, still the growth is little slower. But you have to look at it from this perspective that over the last couple of years, given the low capacity utilization, so much of assets have got created across industries, the capacity utilization is low. In this cycle, as the cyclical recovery gathers momentum and the top line increases, all your costs are likely to remain under control. So raw material cost, interest cost, your wages, communication, transportation, real estate in this cycle, with all the efforts that the government has made. And because of that, this time as the recovery gathers steam, the flow through to the bottom line could be sustained and could be high. So that will keep surprising for a couple of years. And I think that's what the market is looking at, and not the numbers last quarter or what can happen in next quarter.
Okay, fair point. Let's talk about the aggregate picture. So one side you've got this hope or assumption that economy will recover. I'm using words carefully because it's an assumption, it's not in reality. Markets work with assumption, I understand that. But the reality is that pharma is contracting. The reality is that IT is contracting. The reality is that banks have not recovered. So one end of the market is looking strong, other end of the market is the pull factor. So the balance picture looks nothing great.
So it's quite interesting. You look at the 50 names, of course we are at an all-time high, but at the same time there are several names which are down 20% in the last couple of months, and there are several names which are up 20 and 30%, which is a good thing. Wherever there is earnings momentum, wherever there is a higher visibility of growth, market is rewarding them. Wherever it is not the case, market is punishing them. Having said that, some of these stocks that have done well, maybe you talked about, for example, the pharma or a few stocks within the banking space, several of them are structural growth stories. At some point in time, valuations will turn attractive as these companies take the course correction. I'm sure there is still a lot of room for them to go up, maybe a few quarters down the line. Till such time, maybe wherever you have that high growth visibility, those stocks may continue to do well.
You don't in the last 2 years, Navneet, it's the contra bets which have worked out very well. The year before last was about metals, again the underdogs, and last year was about real estate. Any contra calls that you've taken in the market?
So on the industrial space, as I said, that the pace of the spending on infrastructure could have been higher, but I think it will gather steam in next few years. The competitive intensity is going to be lower, whether it's the banks or equity investors will look for return on capital employed and cash flow. There are going to be fewer players who have higher financial flexibility or the execution capability. I think some of those guys will do very well. I strongly believe it's going to be a long cycle of investment. It's just a matter of time, maybe a few quarters down the line, and there could be interesting picks there. You just asked contra. maybe I think at some point in time, you mentioned about the pharmaceuticals earlier. Some of these are like really
But
good
some point in
companies.
time is not right now.
Maybe over the next few months not, because markets are always forward looking. So I think we have discussed it earlier, the pricing gains and the volume gain in US, the market share gains, market extrapolated that, market again will extrapolate all the problems which are there from the US FDA or the problems in the generics pricing or the India generics pricing. But at some point in time, I mean, the structural story has not gone anywhere. So the another theme that I can talk about, I think that given the geopolitical risk globally, while the markets are complacent and it's not showing in the volatility, the US becoming more isolationist, whether it's Korea, whether it's Japan, whether it's Middle East, whether it's so many countries in Europe, everybody is going to increase spending on defense. I don't know who benefits in India directly, but the global increase in the defense spending and much more spending on infrastructure as countries become more inward looking, they have to go growth. And for middle classes everywhere, there is anger, and that's why some of these leaders are winning. That could be an interesting theme to look at in next few years.
That's an interesting one, and unfortunate that our listed space is so constricted and small.
You don't have some of those guys will benefit, right? So wherever you do that spending, somebody will need compressors, somebody will need some abrasive, somebody will need.
You don't have a direct play. I mean, let me put it this way. Bharat Forge is a combination of auto, ancillary and defense. If I really look at L&T, L&T is a behemoth which just gives you about everything. BML, highly dependent. I don't think BML will be able to get a large, government order per se. Okay, something which is very close to your heart, the PSU space. And PSU stocks have got massively re-rated. Oil companies have got re-rated. 2-3 PSU banks have got re-rated. BML, BL, these stocks have got re-rated. The PSU index has given better returns than the consumer index in last 1 year. Is there money to be made in purely buying PSU stocks? Because that's where the re-rating is happening.
I think it's selective. So some of the themes or stocks that you talked about, of course we have made good money, but for a long time we did not have PSU banks. I mean, we were more comfortable with private sector banks and
even though your parent is SBI.
Without taking name, and I've always mentioned that 1 or 2 PSU banks who have invested very heavily in digital technology, and I think market underestimates what they have done on the digital side, and then how they can regain the market share or increase the market share over a period of time on the retail side. And at some point in time, as investment cycle returns, your NPA problems get resolved, I think they may get re-rated. But by and large, most of the others, I think, have huge structural challenges to deal with. But again, as I mentioned, that if the investment cycle picks up, some of the names that you talked about, but not it's like you buy each and every.
So retail versus wholesale, let me put it this way. I mean, would you lean towards retail big banks or wholesale big banks?
That has been the stance over the last 5 years every time we spoke, but over the last couple of months we have increased the exposure substantially to even the wholesale lenders.
Okay, finally leave us with the vision for SBI Mutual Fund in the next 3 years.
So since you talked about my parents, so my parent takes pride in saying that we are banker to every Indian, right? I mean, with 450 million customers. So our dream at SBI Mutual Fund is to be wealth creator for every Indian. I think we are at the right time, at the right place in history, where as India grows and we create a growth miracle over the next several years, I think we can be a part of that growth story in promoting the entrepreneurship in this country. On the other side, ensuring that large part of the country takes benefit from that growth story and we create wealth for them.
Of course, I mean,
the AUM is the byproduct.
Of course, I understand. I mean, financial inclusion is just about
it's one of the biggest legacy of this government, and we have discussed so many times that a Jan Dhan Yojana, the next logical extension is Jan Nivesh Yojana.
It has to happen. It has to happen in those lines, and I'm sure one day we'll make it happen. But
absolutely,
my closing comment would be in a very myopic kind of a question, which is that everyone is talking about this SIP culture. So what are the numbers like for you and for the industry? And you think the kind of indications which we are getting from distributors and from some of your peers, are these numbers here to stay in the SIP format?
Are these numbers going to stay? Absolutely yes. Are these numbers going to increase? Absolutely yes. Are these numbers going to increase exponentially? I think yes.
Okay, so what are the numbers like then? Tell us.
So as of now, they would be around 4,500 crores or so for us. We would be touching 500 crores or so. I think we haven't really touched the surface. in the last cycle in 2007 bull market, when the Jan Dhan Yojana wasn't there, this kind of digitalization was not there. If you look at the percentage of GDP which was coming to long-term financial assets like equities through insurance or mutual funds and all, was almost 5.5%. This time it's 4%. We haven't really seen
the
peak of 2007. We haven't seen what happened in 2000. We haven't seen what happened in 91, 92, and we haven't seen what happened in 85. We're a long way to go. And this time with digitalization of finance, I think the financialization of savings is a much more structural than the last time tactical calls that people wanted to double their money in 6 months, 1 year. That's why they invested.
Maturity has come back.
There's
that's
so
what
much
I think
of
is
maturity now. And one of the interesting features last couple of months, the month in which foreigners are selling and market is down because of some global reasons, domestic investors put more money. That is the maturity level. And again, I'll give you a lot of credit for that.
Okay, great speaking with you, Navneet, and congratulations once again on being doing such a phenomenal job in the last 3 years. Let's check in on what the market is then up to, and well, we fizzled out quite a fair bit from that that we started off with. So much unlike the rest of the region or the globe, pretty okay for the small caps. It's just about